So we are at a time where we are seeing the overall NASDAQ, which is very tech heavy, continue to rally and stay on rally mode. At the same time, we recently just saw Tesla stock break out of this trading range that I've been talking about for a while now on the channel, which is very bullish. But to top it all off, we also had the good news that Tesla Model 3s are cheaper than Toyota Camrys in California once you add the tax benefits. I mean, for crying out loud, Tesla Model 3s in California might be able to be priced at $25,000 when the $7,500 federal tax credit and the additional $7,500 California tax rebates kick in. So we're seeing Tesla stock stay strong with its pricing power, while at the same time, the CEO for Ford recently said that their EV costs may not come down until 2030.
This is great.
So that's the reason I continue to stay bullish on Tesla stock in the long term, simply because Tesla stock has the lead in the EV space with its pricing power. See, one of the things that bears like to say often is that Tesla has this large market share in the EV space now, but once all the other legacy automakers enter into the EV space, well, that's going to take away from the market share that Tesla has. However, my argument is that a lot of these legacy automakers that are entering into the EV space, they're losing on pricing power because they don't have the profit margins that Tesla has set up already. But although I'm very bullish and optimistic for Tesla in the long term, there's something else that we have to pay attention to going on in the short term, and this is something that Elon Musk himself is aware of as well. For example, the average rate on a new car loan now is 8.98%, to which Elon Musk himself responded with an exclamation mark. So even though Tesla stock is very strong and robust fundamentally, the issue is that we're not in the greatest economic cycle that we could be in, right? Obviously, economically, things look bad. When we have interest rates for car loans this high, well, that obviously takes a lot of individuals who are looking to buy a new car out of the market. Why? Because they simply cannot afford it. Now, this is not a Tesla thing. This is not an Elon thing. This is simply just an economic thing that's going on right now that obviously hurts not only Tesla, but the overall auto industry. On top of that, the United States federal fund rate is still at all-time 10-year highs, which means that obviously money is more expensive to borrow, right? And the Federal Reserve is doing this because obviously they're trying to purposely stifle the economy, right? Because they want to bring inflation down. And so obviously this puts a slowdown in the economy, and this kind of hurts Tesla stock in the medium term. Now, looking at some other economic data, we also see that credit cards are at an all-time high right now, reaching $1 trillion in debt. So what does this tell me? This means that consumers are relying more and more on credit card debt just to make sure that they get through their regular daily spending. Now, this is bad because this shows that there's weakness in the consumers. Again, this is not a Tesla thing. This is just an economic issue. But to make things worse, we have the Treasury Department planning to sell over $123 billion in T-bills right in the next few weeks. Now, the reason why this is a massive issue for the overall stock market, including Tesla, is simply because once we have the Treasury offload this much in Treasury bills, well, it's going to seem very attractive to institutional investors and regular investors alike, right? The people who have enough money to actually move the markets. Now, why are they going to be attracted to these T-bills? Well, it's very simple, right? T-bills are a risk-free investment, right? And so obviously, this is going to drain a lot of liquidity from the stock market, especially because we are coming off massive highs from the tech sector and including stocks like Tesla, right? Just look at Apple and Microsoft and a lot of these other stocks in the tech sector, which have been moving the overall NASDAQ. They've been profiting so much that it only makes sense for institutions and investors to pull the profits off the table and then rotate that money into T-bills. So this is the reason why in the short term, I'm moving much more cautiously into the next few trading sessions. Why? Well, because when there's less liquidity in the market, we end up seeing more volatility in the market. Why? Because there's less market participation, right? There's less capital in the markets, and so that means the spread between the bid and the ask, what people are willing to pay and what people are willing to sell, becomes much more wider, right? There's a bigger discrepancy between the bid and the ask, and so that causes prices to move rapidly up or rapidly down, and causing more volatility due to the lack of liquidity. And so this is the reason why I preach to the Push and Profit private group that we have to have a multi-dimensional approach when it comes to moving in the markets, both in the short term and also in the long term. We have to look at several different data points because, stocks just don't move based on one thing, right? Someone could look at the technicals, someone could look at the charts, but stocks just don't move based on squiggly lines, right? Someone could look at the fundamentals of a company, but even if the fundamentals for a company look good, like in the case for Tesla, well, there could be economic issues that may also hinder the, obviously the fundamentals for the company, right? Because obviously if people or consumers are much more weaker, well, that means that the fundamentals for a company are going to start showing much more weaker. So this is why I pay attention to the overall monetary policies, fiscal policies, and overall the macroeconomic climate. I look at several different data points because we have to look at everything all together to really form a better hypothesis of what's going on in the overall markets. So with that being said, guys, I want to go ahead and break down my game plan for Tesla stock, both from the perspective of a long-term investor and a short-term trader. So I have Tesla stock in my long-term portfolio. Of course, I have exposure to it. And so obviously, as Tesla stock is rallying up, I'm very happy for that, right? What investor doesn't want to see their stock do very well? And so I actually don't plan on doing anything for Tesla in my long-term portfolio until we retract back down to this $216 level. Now, the reason I say that is simply because obviously this level is a level that provided an area of resistance, right? Before it used to be a support. Eventually we broke below it, and we actually broke far below it, and so eventually that ended up being a resistance where we just couldn't break above it for a couple of times. Now Tesla finally broke above this area of resistance, so guess what? This area of resistance now becomes an area of support. So I'm not adding more shares into my long-term portfolio with Tesla until I see Tesla fall back down to this $216 level, right? Because that's simply just buying the dip and dollar cost averaging. It's a very simple and proven method, right? And so that's what I'm waiting, and that's why, this volatility that's going to come into the market in the next few weeks, especially as we're going into the next Federal Reserve rate decision meeting, right, where we have a lack of liquidity, we could possibly see Tesla stock fall down back to this level or further below it, and that's what I'm going to be interested in. That's what I'm going to be rubbing my hands together, pretty much excited to add more into my long-term portfolio. Now, when it comes to trading Tesla, I honestly don't want to trade Tesla pretty much going long until we see Tesla break above $236 per share, because we see here that there's little amounts of volume by price around this area, which means that obviously there's not a big battle between the bid and the ask over here. So that's where we see rapid movements. For example, at this area back then, when Tesla was trending downwards, we see these big moves down, right? And so when Tesla starts going back up there, right, where there's low volume around this area, well, if it's trending upwards, we're going to see big moves up. And so that's what I'm really excited for. I'm not going to be going long until we go into that area, because obviously there's less volume, and if it's trending upwards, we're going to move up, right? And so that's pretty much what I'm going to be doing as far as the short-term trade. Now, if we do happen to break below $216 per share, well, then I'm going to be very cautious, and then not going to really want to trade Tesla until we're back at above $152. Now, again, these are just my views on Tesla. Of course, I look at things from a fundamental aspect, from a technical aspect, and also look at economic data, what's going on with monetary policies, everything, as I said before, because it's vital to really pay attention to understand the pulse of the market. This is why I constantly trade Tesla and a few other stocks, because I understand how they move, especially because I pay attention to what's going on in the economy, right? But with that being said, guys, if you guys want to have more insight into, what stocks I'm looking to trade and the reason behind it and why every single day, make sure to check out the first link in the description of this video, because the first link is going to be a link to the Push and Profit website, which is basically a website where you're going to have access to my daily briefings. If you scroll down, it tells you everything that we offer. You have access to my lesson library, where I go ahead and break down exactly what it is that I look at when it comes to trading and investing, and you have lifetime access for that, as well as the daily briefings. Once you guys have access, you guys will see what stocks I'm looking to trade every single day, the reason behind it, and you have access to the private chat where you get to converse with other traders in there. So definitely take advantage of that first link in the description of the video, especially because we have a massive coupon code where if you simply type in PA for Papa for the Father's Day discount, you get 50% off. This is one of the lowest or biggest sales that we've had in a while. So I would definitely take advantage of the sale as soon as you can so that you could be a part of the team. But with that being said, guys, hopefully you enjoyed this quick video, and I hope you guys make sure to watch this next video right over here. See you guys on that next video. Take care.